Good morning. This is Mike Wise with CMG Home Loans and your weekly mortgage update. And it has been a crazy week this week. The Fed met. The numbers are trending lower. Interest rates are going down. The unemployment number has gone up. So we are in for some lower mortgage rates here. So let's get right into the details here. So if you are looking to refinance, it may be a time to refinance your loan. So if your interest rates are in the high sixes, low sevens, then it is time to give me a call and see if we can refinance your loan from a higher rate into a lower rate, maybe get some cash out. If you did your loan with us before, we will give you the rate rebound. So that's the 5-year. It's actually longer than that, but basically no lender fees, $1,000 credit for your refinance. So a great deal for a refinance. Give me a call. It may be time. You may want to take some cash out. But at a minimum, it might be time to lower your interest rate. So what happened? Fed met. Basically, they all kind of everything was pointing on Wednesday towards a rate cut in September. It's basically 100% now at this point in time. It's a matter of how much, and I'll go into that a little bit later here. But they've basically paved the way for a September rate cut. The numbers are not coming out strong. So the JOLTS, which is the job openings, those are going down further. So the job numbers, job openings are going down. A lot of people, it was a very competitive market, people switching jobs, people, getting increases in pay and so forth. That has stopped right now. There's kind of talk about a recession at this point in time because of the hiring, the jobs numbers. So job numbers came out today, Friday, and they slowed significantly. So they were expecting 175,000 jobs added in the economy, and there was only 114,000 jobs added. So they are very, very surprised by this. And the unemployment rate went from 4.1% up to 4.3%. Remember, the Fed, all the members, they've been pointing towards, a 4.2% unemployment rate. And that's kind of where they were thinking that they would lower the Fed funds rate at that point in time. So 4.2%, we're at 4.3%. Remember, this is not necessarily people getting fired. This is just the job openings are going way, way, way down. And so there's not a lot of job openings out there anymore. And this is the unemployment rate going up to 4.3%. That is kind of the pathway to the lower interest rates. So this is just to give you a kind of a look-see of the yields on the 10-year Treasury. And so the yield went way, 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 way down, hit about 380, which is a low number for a long, long, long time. And then it's bounced back up. So we're sitting right around 386 at this point in time. But the yield definitely moved over the last couple of days. Actually, last week, you can see the impact on the treasuries. The pricing is going up. That means that the interest rates are coming down. So as prices go up, the yield comes down. So you can see this trend here. I didn't put in the trend lines this week, but basically you can see that the yield is trending way, way, way down here over the last 5-6 trading days. So the market is ready for the interest rates to come down, mortgage rates to drop down. So interest rates on a regular 30-year fixed rate Fannie Mae loan, you're looking right at 6.62% on that 30-year fixed rate. Last week, they were at 6.91. So they just today are jumping down even lower. So 6.62 on those interest rates. So it's a great time to look at refinancing and maybe taking some cash out here on this. Real estate market update, FHFA basically unchanged for May. Basically, year over year up 5.7%. The link for this and for the article on the right is in our email. You can take a look at it. but basically it talks about home ownership rates at 65.6%. It's a little bit lower than what we've seen in the past, but housing prices still staying strong. Still, the inventory is starting to pick up a little bit. Still multiple offers on houses, but it is the values, they are staying real strong up here. So as interest rates come down, you're going to see those values stay strong up there as well. So here's a comparison. I already talked about interest rates. Here's the housing market in different cities if you want to take a look at the different cities. A couple of them trending down there, but overall, the rest of the country is moving higher with the home prices. So it is a good week for interest rates. It's a bad week for the economy, but that's the way that goes. As the economy gets worse, interest rates get better. So if you are looking to purchase or refinance, just feel free to give me a call. Let me know. I am doing some refinances actually right now as we speak. And so the lower rates are helping people get back in and get some more cash and kind of readjust where they are in the market with their housing. So this is Mike Wise. I hope you have a great weekend. I will be available most of the weekend here. So give me a call, shoot me a text, and I'd be more than happy to help. Have a great day, and we'll see you next week.